You're watching today's market comment by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us here at XM.com. The US dollar pulled back against all its major counterparts on Tuesday, with the main gainers being the Kiwi, the Aussie, the pound, and the yen in that order. With no fundamental catalyst to drive the greenback lower, its pullback may have been the result of profit-taking, following the rally that was sparked by the latest strong US data. Comments by Fed Chair Powell over the weekend may have also helped the world's reserve currency, as the Fed chief said the committee can be prudent in deciding when to start lowering borrowing costs, as a strong economy allows them time to build confidence that inflation is indeed under control. From being certain about a March rate cut, investors are now assigning only a 20% probability for such a move, while they pencil in 120 basis points worth of rate reductions by the end of the year. The US dollar may rebound and continue its prevailing uptrend if data and Fed officials continue pouring cold water on the market's implied rate path. The Kiwi was the main gainer yesterday, initially receiving support from renewed speculation that China is ready to adopt more stimulus measures to support the market. The risk-linked currency added to its gains after New Zealand's better-than-expected employment report. The Aussie secured second place, aided by the Reserve Bank of Australia's decision to maintain its tightening bias and by headlines regarding more stimulus in China. On Wall Street, all three of its main indices closed yesterday's session in positive territory, perhaps aided by the greenback's retreat. With more than half of the S&P 500 companies having already reported earnings and more than 80% of them beating estimates, the aggregate earnings of the index are expected to have risen 8.1%. This, combined with upbeat U.S. macroeconomic numbers, may allow investors to keep adding to their risk exposure even if the Fed delays rate cuts. Gold also benefited from the dollar slide and the pullback in Treasury yields, still holding above the key support zone of $2,015. That said, a rebound in the dollar may result in a break below that barrier, especially if hopes of a possible lengthy ceasefire in the Middle East translate into reduced demand for safe havens. This was the market comment here at XM.com.